Have you ever wondered why some people become wealthy without constantly chasing the next big opportunity? The answer isn't that they always pick the perfect stock or make lucky investments. Their biggest advantage is time. Long-term investing is one of the most powerful wealth-building strategies ever created, yet most people ignore it because the results are invisible in the beginning. Everyone wants fast profits. Everyone wants to double their money overnight. But real wealth isn't built in days. It's built over decades. In this video, you'll discover why long-term investing works, why patience beats timing the market, and why the richest investors think in years instead of weeks. Let's begin. Imagine planting a tiny seed. For months, nothing seems to happen. You water it, you protect it, you wait, then one day, it becomes a tree. Investing works exactly the same way. In the beginning, progress feels slow. Your portfolio barely changes. You might even question whether investing is worth it. But over time, growth begins to accelerate. This is where most people make their biggest mistake. They quit too early. They chase the newest trend. They jump from one investment to another, hoping for quick profits. Instead of allowing time to work for them, they interrupt the process. Successful investors understand that time is more important than perfect timing. They don't need to predict every market movement. They simply stay invested. One of the greatest forces in investing is compound growth. Your money earns returns. Then those returns begin earning returns of their own. Year after year, the effect becomes larger. At first, the growth appears slow. But eventually, small investments can grow into something far greater than most people imagine. This is why starting early matters so much. The earlier you begin, the more time your investments have to grow. Even small amounts invested consistently can outperform larger amounts invested much later. Another reason long-term investing works is because markets naturally experience ups and downs. Prices rise, prices fall, news creates fear, headlines create excitement. Many people panic during market declines. They sell because they're afraid. Later, when prices recover, they buy back at higher prices. They accidentally do the exact opposite of successful investing. Long-term investors understand that temporary declines are a normal part of the journey. Instead of reacting emotionally, they stay focused on the future. They know that short-term volatility doesn't always reflect long-term value. Patience becomes their greatest advantage. Another mistake people make is trying to time the market. They wait for the perfect moment. They believe they'll invest when prices stop falling, or when the economy feels safer. The problem is that nobody consistently knows when the perfect time arrives. By waiting, many people miss years of growth. Long-term investors don't wait for perfection. They understand that consistency usually beats perfect timing. Another powerful habit is investing regularly. Instead of trying to predict the market, they continue investing through good times and bad. When prices are high, they invest. When prices are low, they invest. Over many years, this disciplined approach reduces emotional decision-making and keeps them focused on their long-term goals. Long-term investing also protects you from one of the biggest enemies of wealth: emotions. Fear convinces people to sell. Greed convinces people to chase expensive investments. Patience allows investors to ignore both. Successful investing isn't about being smarter than everyone else. It's about controlling your emotions better than everyone else. The world's greatest investors understand this. They don't become wealthy because every investment succeeds. They become wealthy because they stay consistent, think long-term, and avoid making emotional decisions. Another important lesson is that wealth is built through ownership. When you own productive investments, you participate in future growth. Businesses grow, innovation continues, economies expand. Patient investors benefit from that progress over time. This is why many wealthy people don't constantly check their investments every hour. They focus on years, not days. Daily price movements rarely change a long-term plan. Their attention stays on the bigger picture. Long-term investing also teaches one valuable life lesson: the greatest rewards often belong to those who are willing to wait. In a world filled with instant gratification, patience becomes a competitive advantage. While others search for shortcuts, long-term investors quietly build lasting wealth. So remember this: you don't need to become rich overnight. You don't need to predict every market move. You don't need perfect timing. What you need is patience, consistency, discipline, and enough time for your investments to grow. Because in the end, wealth isn't created by speed. It's created by staying invested long enough for time to do the heavy lifting. The power of long-term investing isn't hidden. It's simply ignored by people who refuse to wait. Those who understand it don't just build bigger portfolios. They build lasting financial freedom.